Welcome back, traders. It is Monday, January the 23rd. Time to kick off a new trading week. We had an amazing week last week. Let's get into the details. Okay, so once again, we had an amazing week last week. We have been just on a tear this year, which is a little different than last year. January was a little bit of a tough go as we got started. So we're way ahead of our expectations. You know, we set a goal of about 5% a week net return after everything is said and done. It's a pretty aggressive goal. Based on the amount of risk that we are willing to allow to take place. Obviously, you could shoot for more if you wanted to take excessive risk, but we don't. And we've been absolutely just successful in achieving that. And a couple of our new trades, the overnight vampire trade for one, have been a big help in doing that. Scalping has been really good for us so far this year as well. But let's go ahead and get into the analyses of the marketplace. And I'll share with you kind of what I'm looking at as we get going and getting started here. One of the things that we do start with always is our technical analyses, looking at support resistance areas and seeing if we have buy or sell signals kicking in on the 12 major indicators that we use, as well as moving averages. And we pull pivot points out of that so that helps us again find some support resistance areas to set our zero DTE trades up. If we do pull back and we look at a weekly level, we look at all of these statistics on a daily level in the trading room. But on a weekly level, we're still in a buy mode. We've been in a buy mode here for a little bit, but we're definitely ping-ponging off of some pretty substantive support resistance areas, and we'll get into that here in just a second. If you look at the overall market, though, and again, I think it does behoove us to always sort of pull back a little bit, look at the 30,000 foot view, if you will, regardless of what the market has been doing, and we have been pushing up here quite nicely for the last little bit, going back a week or so in time. Overall trend, obviously, still down. Some pretty big demarcation points along this journey in the downward fashion. We've tried multiple times here to break above this. We tried pretty aggressively back in the summer of last year, and we were rejected. We've had a nice run that started right in here in the latter part of the third quarter of last year, the fourth quarter, October of last year. We're rejected there again. We've tried again, just most recently, we kicked this off around the first of this year, and it's been tough going, breaking above that downward trend. So overall, downward trend, bearish bias still in place, still is the way that we are setting up our trades. Most of our portfolios, our ATM, our investing program, our live trading room, most of the positions that we are carrying, not our day trades obviously, but things that we are carrying on the books, we do have a negative delta pretty much across the board. If we pull down a little tighter and we look at the chart that we use on a daily basis to sort of set up our support resistance levels for our zero DTE on that particular day, we use the 2-hour candles on that. And there's some specific levels in here that I want to share with you that I think can be helpful in looking at where this week might be started and where we're going. So a couple of key areas here as we pull in over the last few days of trading. Again, you can see that we had this pretty powerful rally sort of kick off of this consolidation area here around January the 8th. And that was a really nice run. And then comes January 18th. We get a pretty good resistance level up in here. If you go back in time, this is again is just a 2-hour chart, but if you go back in time past November, you can see that this area right in here is pretty substantive. Sort of this, as we get up to these levels here, we've had a tough time even in the past getting up above here. And so really it was about January 18th where the rally really fell apart. We came down pretty hard for the next day down to January 19th, and we bottomed fairly well at a level that we've talked about a bunch as of late, and that's the 3,900 level. It's really about 3,902 to 3,905. But man, we bottomed really hard right down here, had a really sharp rebound. If you look at this and you know the challenges that this kind of a whipsaw can present, we're pretty happy with our results so far this year with our zero DTEs. And taking early captures in the day has been really a critical thing for us as the market's been vacillating like this. But it bounced really hard off of that 3,900. We go to January the 20th, and it stalled out again back at this sort of 39.85 level is where we've been stalling for over from Friday over the weekend here and Sunday through the futures market. We just kind of been stalling out here at 39.85. So some of the numbers that I'm looking at for today, this would be more for the bulls to the upside. I would be looking at, first of all, 39.95. That's a pretty big level, and this is again the level we've been seeing this here. We've been seeing this a couple of times. Pretty big resistance levels there. So that's, I think, the first goal for the bulls is to break above 39.95. Above 39.95 comes 40.15 for me. That is a consolidation area. This 40.15 area up in here, it's been a pretty strong consolidation area. Above 40.15 comes 40.33. And then 40.53 above that one. And then above 40.53 right here, I would probably look to get short this market. I would probably look above 40.53. Depending on the price action, I would start looking at maybe picking up a short E-mini contract and cash flowing that to the downside. So that's sort of the numbers that I'm looking at today as we get started this week for the bulls. For the bears, going to the downside. Now, as we're speaking right now, man, we're still just sort of stalled out right in this area. We're almost unchanged on the E-minis, down 3 points. It's not really anything substantive right now to get any kind of real reading for today, Monday, as we kick things off. But for the bears to the downside, 39.76 is my first big level. If they can break down below that, they might be able to build some momentum down to 39.62 would be my next level of support. 39.43 goes down below that one. And then 39.28 below there. 39.11 below there. And then we get to that really big substantive area right down in here. This is, again, sort of I would say 39.02 to 39.05 level. That's been a really, really big support level. That's really a critical one if you're looking for a bearish bias to establish itself. We could break below that. We could get some pretty substantive downside. So those are the areas that I'm looking at today as we get started with our zero DTE trading. As it looks right now, we may very well start off with a very delta neutral position, maybe a full iron condor or even a chicken iron condor here as we start the day. Again, if we pull back and look at the major indices that we trade via the ETFs, the SPY, the Qs, the IWMs, and the diamonds, you can see that, again, the overall trend is still down. We've had some goes at all of these major indices of trying to break up above that longer-term downtrend. The diamonds have done an okay job of it. The IWM has done it a couple of times. But you'll see that as we get into sector rotation here in just a moment, really it's been the diamonds that have been the weakest as of late, and that breakout just doesn't look like it's going to be very sustainable. Overall trend still down, still bearish on all of the overall indices. We look at the market performance, and again, I think it's just obviously, of course, interesting to know where the market is at year to date. But I think it's also important to see the divergences between the major indices, and that definitely helps us in our trading room with our 4-day to expiration trades that we do on the SPYs and the Qs, in sort of understanding which one might be a little more overextended or pushed down too much, depending on how the market has reacted and how we would scale into those particular trades. But you can see the market off to a pretty decent start, really, for the year, up almost 4 points so far. That's obviously a pretty good start annualized. It's almost 50% a year. I think that we're going to be in for a little bit more challenging market than that. I don't think you're going to see 4% a month every month going forward. But man, the NASDAQ has really been the one that has been powering higher, along with the IWM as well. And like I say, for the first time in quite a little while, the DIAs, the diamonds, the industrials have been underperforming. That's really helped out our DIA ladder trade that we've been trading. Earnings season, full effect. We're back into a full entire earnings season. I won't take the time here to go through all of the earnings that we are going to be tracking and looking at trading this week. But starting tomorrow, Tuesday, we may very well do at least one earnings trade every single day this week inside of our live trading room. A lot of companies coming out and reporting this week. So if you are in favor of trading earnings reports, this is a good week to start digesting some of that information. A lot of activity going on. We talked about sector rotation. We talked about the diamonds, the DIA, and the industrials really are, over the last week, the area that has been hit the most. For the very first time, I believe, since we have started our diamond strategy, our long Vega approach to laddering the DIA trade. We ladder that trade pretty much every other week, if not every single week. We are back to a positive delta where it actually is leaning a little bit more to the bullish side. We haven't been hit this much in a long time on the diamonds. So again, that's been very good for us, but that's an area that we're looking at, and that as well as financials, as the banks have just reported. That's been a couple of big areas of focus. We look at the heat map week over week. This is 2 weeks ago, and then this would be last week right here. And you can see it just kind of basically taking a little breather here over the last couple of weeks. Again, the IWM was strong 2 weeks ago, but this past week, it's really just been sort of a big nothing burger. Now, if you're trading the zero DTE strategy with us or on your own, this doesn't belie what really has been happening. We've had a lot of volatility over this last week, but it really hasn't materialized or shown up in the end of day results. And I would anticipate that that's not going to maintain in that manner for very long. Consolidating markets lead to expanding markets lead to consolidating markets. I think we are due for a break, either clearing some heavy resistance on the upside or coming back down into our previous range on the bearish side. So we'll have to see how it develops this week and if we can get some movement. We're fairly light this week on news catalysts, and it is usually a news catalyst of some kind, economic report of some kind, that can get this market moving. So we'll have to see. Maybe it's not this week, but next week. We look at the put-call ratios to sort of help us gauge market sentiment. And if we look at them all across the board, you can see that we're starting for the first time in a little bit, to get a little bit of a bias to the downside, a little bit of a bearish bias in the put-call ratio. We haven't had that in a while. And so I'm looking at that. I'm looking at the expected move right now, which is still very, very consolidated. Both of these numbers are very similar. If you will remember, 2 weeks ago, last week, we did have a shortened week with the holiday. And so they're basically the same numbers, very, very low. I mean, we really, really enjoyed last year numbers around 120 to 140 points of expected moves. And this is one thing that we have been talking about in the trading room this last week or so, that if these types of expected moves persist, which I don't see why they would change here in the near term, meaning if they don't push up and we don't get a little bit bigger expected weekly moves in the marketplace, premiums are going to be reflected in a smaller number, and that makes it a lot more difficult to roll or adjust out a 0 DTE trade. So we'll probably be taking more losses on 0 DTEs than we have in the past, but the losses should be much smaller, and we'll talk about that in just a second as we look at our performance year to date as well. But low premium right now. You've got to get in quick. You've got to make these trades fast. And if you need to adjust, you need to be very aggressive early in the day, because if you wait till the last couple of hours, you're going to find yourself lacking the premium to be able to properly adjust that trade. We look at the fear and greed sentiment reading, and that, along with the put call ratio, is getting up into this greed area, and I think that we're starting to see some indications that maybe we are pushing up to this resistance area and maybe not being able to break through it. I mentioned earlier here there's some specific levels on the E-minis where I'm looking to get back into a short position. We haven't had one of those for a while, but that's on the agenda as well. As we get, again, this is a contrarian indicator. The more greed you see in the marketplace, the more cautious we usually want to be. We look at open interest areas in the marketplace. Again, the E-minis right now are sitting around 39.87. And on the SPX, you can see that 4,000 level is the big wall that we've been, hitting up against for a really, really long time. It's another reason why I feel like it's going to be a little bit of a challenge for this market, even though we're getting bullish indicators right now. It's going to be a little bit of a challenge for this market to push up through that, at least on its first attempt. It may certainly be able to push through that, but to hold it, I think it's going to take a few shots, a few tries at that. So again, keeping a big eye on the 4,000 level. We look at volume in the marketplace again, and you see that volume is not really helping us in terms of trying to pump some volatility into the marketplace. We pump some volatility and some volume. Maybe we can get some higher expected moves. We get some higher expected moves. Maybe we can get some bigger premium, and we can have a little bit more profit potential and flexibility in adjusting our 0 DTs. But right now, that's not the case. We're just kind of trudging along here. We look at key news items for the week, and again, it's a fairly light week. We have PMI flash numbers coming out on Tuesday. Oil inventory numbers for us on Wednesdays are always big. They're always important as we trade oil every single week in our live trading room with a ladder approach, laddering in on that. That trade, all of our ladder trades have been phenomenal, but none of them have made the ROI that oil has. It's just been absolutely phenomenal for us. Haven't taken a single solitary loss in that trade. You'd have to go back well into last year. It's been a really good setup for us. So that's a big number for us on Wednesdays. We want to see what oil inventory numbers are, how it affects the futures market before we put our next ladder on. Usually we're targeting a Thursday, which would be obviously the day after this report, to put our oil ladder trades on. Thursday, we do have jobless claims, and we've got GDP, quarter-over-quarter numbers. And so GDP numbers, I don't believe are going to be a big driver this week because I don't think that it's going to be a big surprise, but it's always there as a potential catalyst. So we'll have to see how that goes. Nat gas is going to be a huge number for us on Thursday, or inventory numbers on nat gas. We have a really, really big nat gas trade on. It's one of the most difficult underlyings that we trade, but it certainly has rewarded us. It was one of our biggest winners. If you APR it out, if you look at the annualized result over the entire year, last year our nat gas trades put some of the biggest dollar amounts in our pocket, and every one of those trades was a battle. Every one of them was a struggle and a battle. We're in a pretty big nat gas trade right now. And that trade expires, take a look at this real quickly here. It expires on January the 26th. So it expires on Thursday. So that's going to be a big focus for us on Thursday, watching that nat gas number. Friday, we've got consumer spending and the University of Michigan sentiment readings. And we actually did have a little bit of a move the last time we got sentiment reading numbers out, which you just never know. You just never know. But these are just very few catalysts, news catalysts that we have for this week. So that can mean good things. It can mean bad things. It can mean that we create a vacuum and then that brings in volatility, or it can mean that we just have a very calm week. So we'll have to see how that rolls out. We look at our updated performance for the year so far. Obviously, we're still very new into the year, but we have had 13 days of opportunities with the 0DTE. We've done 18 total 0DTEs this year so far. We've had some pretty good luck with doubling up on 0DTE opportunities. We've had 17 winners, 1 loser, about a 95% win rate. Still very early to start calculating all of our success or failures here. But what I think is interesting is that loser was basically, let me see what the loss was on that. I think it was just under $400. $370 loss is what I took on that 0DTE on about $10,000 of capital. So again, I would anticipate that we will probably be taking more losers on purpose this year rather than rolling and trying to adjust trades, unless we get more volume and higher premiums coming back into the marketplace. But that's a good thing because it should keep our losses at a much smaller level. So very happy so far this year with our 0DTE results. We look at our 4-day to expiration trades on the SPYs and the Qs. We've had 7 total trades so far, no losers so far. That's been fantastic. Our IWM credit strangle, we've had 3 weeks so far, obviously, and we've done 5 total trades. So we have taken the IWM trade off midweek a couple of times and reapplied it. And this is one of our trades. We've had a couple last year, but this is one of our trades that we ran every single week all year long last year and never had a losing trade. So we're obviously still very early in the year right now, but so far so good on the IWM credit strangle. Pairs trades, we just barely added 3 new pairs trades into our model portfolio. We just did that last Thursday, I believe. And so we still don't have a result on those, but those are all up and working right now. And we tend to work those over a 2 or a 3 week period until we can try to get somewhere between a 2 and a 10% return. Then we book our profits and move on. That was another strategy that we deployed all of last year where we had all winners and no losers. So got a couple of big hurdles on some of our trades to try to meet this year. And that's a tough one, but we'll see how well we can do. We really had some good success with our pairs trades. Bear market trades, we've done a couple of shorting trades so far this year. And we are in another carryover one right now from last year with Boeing, which has been a struggle, but it looks like finally we're going to have a decent opportunity this Friday. We have a Friday expiration coming up to exit it at a really nice profit. And again, it's just the flexibility of being able to adjust a trade rather than using stop losses. Our equity 4-day to expiration strangles, we did this all year long last year on PayPal, and it was an amazing result. Right now, we're using Netflix. That changes. The ticker symbol can change. We're looking for something that has a very definable trading range with some volatility in that range and some really high IV. We changed out the PayPal for Netflix this year because implied volatility has dropped on PayPal. Not the case on Netflix. It has been a ripper so far this year, and it's been a good trade for us. And this is a trade, again, last year that made us over 100% on the year. And you never know what we're going to get out of a trade, especially over a 12-month period of time. But right now, the Netflix is tracking better than that. So pretty happy with that trade as well. Positive Vega DIA trades. We talked about our DIA ladders, our diamond ladders that we put together. We've added 2 ladders so far this year. All of them have been winners, no losers. That's been a great trade for us also. Scalping, Monday was a holiday, and so Tuesday was not a scalping day for us, so we were back in the live trading room just as we would normally be on a Monday. And then Thursday, I had to head out early for a dirt bike race. Haven't been at a race for a couple of years, and finally back at it. And so it was a great day for scalping on Thursday, but I had to cut it short. But still, $600 is $600. Scalping has been a huge, huge benefit in smoothing out our returns, and it's always nice when we don't have a zero DTE that works, or just it's kind of a yucky day overall for our model portfolio to bring in $500 to $1,000 on scalping. It really helps. So scalping has been a nice smoother to our overall results. Dragonflies, again, we've got that one BA trade that's working right now that should expire this Friday. Knock on wood, hopefully fully profitable. We're going to actually be adding to the put side of that trade here today, Monday morning, to try to bolster the income potential on the trade. Theta Fairy trade, man, it's just been awesome. What an awesome trade. If I do say so myself, we've had 14 total Theta Fairies this year so far, 13 winners, 1 loser. It's just been an awesome setup. It's so nice to have a not guaranteed, but realistic shot at bringing in $100 every day as you just wake up and get started on the day. And it's been great for that. Gold ladders, we've done 1 gold ladder this year. It has been a winner for us. Gold has been a tough trade for us, but we have not taken a single solitary loss on our gold ladders so far this year. So we keep chasing gold up, and I think every time we do, we add a credit to the trade. We add potential profit to the overall situation. I think it's going to end up really well for us, but it's been a challenge for sure. The oil ladder, we talked about oil before. That's been a great trade for us. Huge ROI potential on our oil ladder. Of all of our ladder trades, oil by far has the highest ROI potential, and it's been great so far this year. Our overnight vampire trade, we did the first official one in the trading room last Thursday. We did one before that I just sort of used as a demonstration. Just an amazing result. We did a small one here in this trading room and only brought in just about $1,400 of profit overnight, $1,375, I believe. But I know many of our traders used the normal amount and brought in about $13,750. So, 13, 14 grand in your pocket overnight. It's an interesting setup. It's an interesting trade. And I think it's going to be one of our, we only get 1 shot a month at them. So we're going to have 12 of these this year, but it's been a great trade for us. Our investing program, the ATM program, the asymmetric trading method, I don't know what to say. It's just been fantastic. We decimated the market in 2021. We beat the market by an even greater percentage last year in 2022, making a ton of money while the market was losing a ton of money. Worst year in the marketplace last year, 2021. You had to go back all the way to 2008, and we just crushed it. And so far this year, we're hanging in there. The S&P is up about 4.5%. We're up about 3%. Our focus is dual fold, beat the market, but do it at less risk. We're running at about 70% less volatility this month right now than the S&P. It's tough to beat the market when you're trying to take less risk, and it's up almost 5% in a month. But I think that you'll find December of this year, you're going to be pretty darn pleased with that number as well. At least that's the hope. That's the desire. So if you do want to come trade with us, a couple links I can give you. You can come trade in our live trading room with us side by side, ask questions, interact. And you can do that by just going to try0dteforfree.com. We do have a 200% guarantee, double your money back. Basically, if you like the program, you come in for free, you check it out. You want to sign up for a month. And if you follow all the steps that we say and you don't think it is the absolute best trading room out there today, I'll give you double your money back. So we have the best program in terms of, I think, guarantees that you're going to find out there. There's no reason really not to give it a go. If you do want to focus more on investing rather than trading, we do have our investment program, the asymmetric program. You can go to tryastforfree.com and you get 2 weeks of free trial there. And again, our goal is better returns than the S&P 500 with less volatility. It's been absolutely amazing. Last 2 years in a row, we have absolutely crushed the top hedge funds in the world. So yeah, pretty happy with that. If you want to come scalp with us on Tuesdays and Thursdays, we do live scalping every Tuesday and Thursday with the goal of making $500 to $1,000 a day in profits. There's no guarantees, but that's what our goal is. You can go to tryscalpingnow.com. So that is it for this week, guys. We're just about 2 hours or so away from the market opening, and want to give you guys a bunch of appreciation. Was able, again, to get away this weekend. Go back to my dirt bike racing heritage. It's been a couple years since I blew my shoulder out and I've been off the bike. And man, it was great to just know that if wherever you are, if you have an internet connection, you have the opportunity to make some money. And we watched that $1,375 profit roll in on the overnight vampire trade. And I did it while I was racing my dirt bike. So appreciate you guys being part of the program. Hopefully you have a good week trading. Let me know in the comments below what you guys are looking at. I would be very interested in earnings trades. It's going to be a busy earnings week this week. So we're going to be busy with them for sure. Have a good week, everybody, and we'll talk to you guys really soon.